welcome to another evening session of the closing bell for week ending 21st of June. We have a fair bit of people coming in, so I'd like to welcome all of you. Hi, Yup. Hi, Tech. There's two Tech here. Hi, Sun Cheng. Hi, Miss Tang. So we'd like to welcome also our new premium members as well as some of our JSSME members. Okay. So last week, looking back at my notes, we registered the first test to the support 1750. Now, last week, if you look back to the notes that I have here, which is this last Friday, am I correct? Yeah, Friday. So it broke through market Monday, or was this Monday, Tuesday, Wednesday, Thursday, Friday. So as I said before, we're going to have a lot of tests testing the 1750. Today, the market closed back up 58. Miraculously, it hits a low of 1730. Now, this is the whole point. As the market progresses uh, to the right side of the chart means we are going forward to beginning of July. There will be going to be more tests. Now the clue is to look for the high and the low of the day. Now we have seen that the low, in this case, sorry, the high is. Let me just mark this. Maybe I don't like that color. Okay, I don't like green like that. The high here is definitely lower than this high, and this low is definitely lower than this low, which means market is pointing on the downward trend, definitely pointing on the trend. We have done what we call a rollover to the downside. Okay, that's not gonna the upside roll up is not going to happen very soon until we see some sort of a test here. At this point, we can safely assume markets tend to be, biased to the downside. But at this junction, we might see it tested. Okay, we'll give you a bit more clues for what's going to happen tomorrow as we see more people coming in now. Hello guys, hi Yao. Okay, nice to see you. All right, hi Amy. Okay, so that's what's happening now. Now, last week we did talk about possible corrections. Should there be a breakdown and a violation of the gap? Now, the violation, like it or not, it has been violated twice. If you see this gap here, we couldn't have. Let me just draw the gap here. Okay. Hi, Darren. Okay, good. We have seen this gap here. This gap are not supposed to be a no man's land, but we have seen intrusion this bar and this bar, so that's why we are noticing the downside risk coming on about here. Now you all know what has happened. For those of you who haven't been following the news, Ben Bernanke has given up a timetable for the withdrawal of the QE3, which is likely to be sometime next year, mid 2014. There are many meetings of the US FOMC going forward. So from time to time, you will get this kind of a news being precipitated out from Bloomberg or as well as any news like CNN and so. So that's pretty much going to tell you what's going to happen going forward. But come this year end or perhaps as early as October, we would see the tapering of the QE from 85 billion to likely to be 65 billion, as the next year forecast for the US is going to be good. Unemployment rate is going to be revised from a 7.6 to 6.5 to 6.8. So that's meaning US is going to be recovering. So that also points to a better GDP growth for US to a 2.6 to 2.8%. So meaning what's happening, the message is very simple. Ben Bernanke is going to be taking the crutches, the crutches that you use for when a guy is handicapped off and letting him walk by itself. So the thing letting walk by itself, we are referring to the US economy, because you can't put the US economy too long on the crutches being stimulated, and that will actually be impair the balance sheet of the United States, in this case the US Federal Reserve. So what is happening in now is, as the Fed is taking the crutches off from the US economy has to rely on its own feet to be able to walk out. That's what this is about, tapering it off. But the concern that we're seeing is we are seeing a global market sell-off that's saying that, look, this tapering is bad. We should start taking profit because there is no real recovery. Now, the question is whether you believe there's a real recovery or you don't believe there's a real recovery in the US economy. That is the question. And that's why we're seeing a lot of uncertainty and volatility that's moving on. So that's giving you the background as what we have seen so far. But today, all markets are seeing recovery in it. Definitely for the Malaysian markets, as I said before, the market is a very nice up bar here in here. There's always the penetration to the support level at 1740, 1750 can be seen as a test. Okay, now very test. Now this is just not going to go on just 2 times. There will be more tests going in forward. At the same time, this week I happened to catch up with Mr. Pong Teng Siu during one of our Bloomberg updates that we have in the Menara 3 Petronas Tower. And we did touch base a bit on, and he is concerned about this so-called recovery over the last 3 to 4 years has been pretty much uh, so-called a fake, right? Because a lot of these are done to stimulate the market. Nothing has been done, a real recovery. But if you've been listening to the analyst report, a lot of the heavy lifting, we call heavy lifting on the economy, has been done by lowering the interest rate, prompting banks to borrow. But a lot of banks are not also lending out unless the credit company of these companies are good. But if you think of it, if a company credit are good, they don't need to. Why would they need to borrow? Okay, so going forward, what we are seeing in here, and my discussion with Mr. Pong has been that this market of Malaysia will still be supported, right, until the end of the month. Now, you all know what is happening to the end of the month. What is the end of the month? End of the month is 30th of June 2013, which is the end of the first half of the year 2013. So typically what we will get, we will see window dressing. Okay, window dressing, which means fund